Let's be honest, tax is a word that can make anyone's head spin. But what if I told you that you could get a solid grasp of the entire Malaysian tax system in just a few minutes? Well, that's exactly what we're going to do. We're breaking down how it all works, who it affects, and most importantly, what it means for you. So let's dive right in.
So, what is tax at its core? The simplest way to think about it is like a national membership fee. We all chip into Club Malaysia, right? And in return, the government uses that big pool of money to build and maintain all the things we share: our roads, our schools, our hospitals, even our national security. It's really just the way we all fund our public life together.
But taxes do so much more than just pay the bills. They're actually a really powerful tool for shaping the entire country. Yeah, of course, they generate revenue. But beyond that, the government uses them to steer the economy, to fund huge development projects, and even to tackle social goals like trying to reduce the wealth gap. And sometimes it's about influencing our behavior. Think about those sin taxes on things like cigarettes. They're there to make them a bit less appealing. So here's our game plan for today. First, we'll see who's actually in charge of collecting all this tax money. Then we'll get into the two main types of tax and figure out what kind of income is even on the table to be taxed. We'll also cover a really recent rule change about foreign income before we answer the biggest question of all: do you need to pay tax? All right, first things first, who actually runs the tax show here in Malaysia? It's not just one big organization. The job is actually split between two main government bodies.
So the whole system is kind of split in two. On one hand, you have the Inland Revenue Board, or LHDN as we all know it. They handle direct taxes. We're talking about things like your personal income tax. And on the other hand, you've got the Royal Malaysian Customs Department, or JKDM. They're in charge of indirect taxes. So two very different roles handled by two different agencies.
Okay, so we've mentioned direct and indirect taxes, but what is the actual difference between them? It's actually a lot simpler than it sounds. Let's break it down.
You can pretty much sort all taxes into two big buckets. Direct taxes are, well, they're direct. They go straight from you or a company to the government. Income tax is the classic example. Indirect taxes, though, they get to the government through a middleman. So when you buy something at a store, the sales tax is already baked into that price. You pay the store, and then the store is responsible for passing that tax money along to the government. See the difference?
All right, let's get into the specifics. When LHDN talks about income that can be taxed, what are they actually looking at? What counts? And as you can see, the government casts a pretty wide net. There are 8 main sources they look at. The obvious ones are there, of course: your salary from your job or profits from a business you're running. But it definitely doesn't stop there. Earning rent from a property you own? Yep, that's taxable. Getting dividends from stocks? That counts too. Even things like pensions and royalties fall under this umbrella. The key thing to remember is that income isn't just your paycheck. It's any money coming in from a whole range of sources. Now, let's talk about something that's had a huge shift recently: income you earn from overseas. This is what's known as foreign source income, or FSI. Basically, it's any money earned outside of Malaysia that you then bring into the country. The rules here have changed, so this is a really important one to know about. You see, for a really long time, we're talking almost 2 decades, from 2004 all the way to 2021, most foreign income brought back to Malaysia was tax-exempt. But that all changed in 2022. The government got rid of that exemption for resident companies, gave a short transition period with a special 3% rate, and then from July 2022 onwards, boom, the standard corporate tax rate applied. This was a major policy shift. So, does this new rule hit everybody? Absolutely not. And this part is really crucial. For individuals who are residents, your foreign income is still exempt until the end of 2026. If you're a non-resident, you're exempt, period. And, very importantly, even resident companies get to keep their exemption on any dividend income from overseas. So, while the main rule changed, you can see there are some very important exceptions to be aware of. Which brings us to our final, and let's be honest, the most personal part of all this. We've talked about the what, the why, and the who. Now let's talk about the you. This is the million-dollar question, isn't it? After everything we've talked about, do you actually need to register for and pay income tax? The answer pretty much boils down to one magic number: 34,001 ringgit. This is the annual income level you really need to remember. Okay, So here's the bottom line. If your yearly income is RM 34,100 or more after your mandatory EPF contribution is taken out, then you are legally required to register a tax file. Now, for a lot of employees, this actually happens automatically. If your boss is already making monthly tax deductions, MTD, from your salary, then a tax file is already being set up for you behind the scenes.
So there you have it, a whirlwind tour of the Malaysian tax system, from the big picture all the way down to that one number that really matters for you. Now that you have the framework, the question isn't just about taxes anymore. It's about how this knowledge is going to shape your financial future. Thanks for joining me.